Hello, I'm David Cassidy with the market update today, Thursday, July the 2nd. The tug-of-war between an economic recovery versus a rise in coronavirus cases and geopolitical tensions continue to yo-yo equity markets. However, this morning, the bulls are in charge as equity markets are trading higher. The FTSE 100 is currently up around 1%. And this is following positive economic data and news of a possible coronavirus vaccine. In the US yesterday afternoon, the initial headline ADP employment change data appeared disappointing as just 2.37 million jobs were added in June, which is well short of economists' consensus estimates of 2.9 million. However, May's data saw a massive revision, having previously reported that 2.76 million jobs were lost. It was revised to show that 3.06 million jobs were added, an incredible 5.82 million difference. Consequently, May and June data taken together shows that the US employment market is improving rapidly as lockdown restrictions start to be eased. Additionally, this bodes well for this afternoon's important and market-sensitive non-farm payroll data for June. And if we get a blowout number, which we believe we will given the number of states that have reopened, which would boost leisure and hospitality jobs, it will give the equity market sentiment a nice boost going in to the weekend. US equity markets are closed tomorrow for on Friday, the 3rd of July, for the long Independence Day weekend. US ISM manufacturing also, unsurprisingly, recovered nicely from 43.1 to 52.6. We've mentioned a number of Fed district activity indices over the past couple of weeks, such as the Empire State and the Philadelphia Fed surveys, which have come in strongly and give us a big hint that this reading would be strong. 50 is the line separating expansion and contraction. So not only is a reading of 52.6 very positive in itself, but this is the best reading since April 2019. This all indicates that the US, the largest economy in the world, is on track for the V-shaped economic recovery that we've been talking about for some time. Admittedly, uncertainties have increased with the spread of the coronavirus in a few states. However, we believe it is wrong to assume data will quickly turn negative given that we are still in the early stages of the recovery, coupled with the fact that a coronavirus vaccine probably isn't too far away given the staggering number of drug companies around the world working on a vaccine. And yesterday afternoon's announcement that Pfizer's phase 1 vaccine trial produced a strong immune response is very positive. Elsewhere, the minutes of the last Fed monetary policy meeting held on the 10th of June didn't shed much more light on their thoughts, other than the Fed is currently conducting a review which may mean a symmetric 2% inflation target, thus allowing the Fed to run the economy and inflation a little hotter in the future, as the current 2% target has been massively undershot for most of the period since the 2008-2009 global financial crisis, as the focus on not breaching the 2% target can and has resulted in the premature withdrawal of monetary stimulus. It's a very busy afternoon and evening for us, given the volume of economic data due out, including, as we mentioned earlier, the highly important non-farm payroll, plus the US unemployment rate, average earnings, participation rate, the weekly initial and continuing jobless claims, trade balance, and durable goods orders, which we will update you about in tomorrow's commentary.